Hello traders and welcome to another video review. Today is Friday, August 4th, 2023. Let's find out what's going on the Forex economic calendar today. As you can see, we got all of the most important data from the US today, and of course the key event of the day and key event of the week is the Nonfarm Payrolls data release, scheduled for release at 2:30 as usual. The market participants expect the non-farm payrolls to drop from 209 to 200,000 people employed in non-farm industry, and unemployment rate to stay at the very same level of 3.6%, and the average hourly earnings to drop from 0.4% to 0.3%. So those are the most important data for today. The market is already positioning itself ahead of the data release. So let's find out what is going on the chart. Let's take a look at the technical picture of the euro dollar. So the euro dollar 4-hour chart is looking bearish. It's looking bearish because the market keeps doing the lower lows and the lower highs. So this is by the definition the internal downtrend. We can of course assume that this is some sort of the correction of this upward movement towards 1.1276. The local low was made at 1.0913, and then of course we got a bounce towards the 50 periods moving average, and the market is consolidating around this level right now. So the market is waiting, of course, for the data release, non-farm payrolls, of course, in order to trigger the higher volatility. So if the non-farm payrolls will be better than expected, the market should rally higher. The market should rally towards the level of 1.1020 and even towards the 100 periods moving average, which is right now at the level of 1.1026. Nevertheless, we need a breakout above the short-term trend line resistance in order to confirm the bottom at 1.09 and 13. And then, of course, in that situation, the next target would be the local high at 1.1150. Please pay attention to the key technical support. This technical support is located at the level of 1.0834. And any breakout below this level would be very negative for the euro dollar, and of course indicate another downward extension and the bearish sentiment on this market. Right now the momentum is still under the level of 50, and besides this spike higher and the rally towards 1.1150 and then very quick reversal, this momentum had been below the level of 50 since the July 20th, when the breakout occurs. So the sentiment is still bearish, the momentum is negative, bears are in control of the market. So the situation with the NFP might trigger higher volatility, but it might be only a temporary situation, right? And then the market might be going back to the trend, which is of course the downtrend. So that's the situation on the euro dollar. Let's find out what's the situation on the British pound. The situation on the 4-hour chart of the British pound is very similar to the euro dollar, but the dip towards the technical support was deeper because we hit the level of 1.2620, and the key technical support is at 1.2590. So it's only 30 pips more for the market to, of course, hit the key technical support. The bounce occurred right after the dip, and the market participants had been testing the 50 periods moving average just around the level of 1.2737. The key intraday technical resistance is located at 1.2804, and of course there, just above of it, there is 100 periods moving average 1.2826, and then the short-term trend line resistance as well. The momentum is again negative. The momentum recently hit the extremely oversold market conditions, so the market is ready for a bounce, but as you can see, every bounce here is being used as an opportunity to enter the short position to increase the bearish dominance on this market. And as the level of the 1.2590 is still not tested, the bears have some work to do, right? But as soon as this level is violated, then of course we have the confirmation of the top swing high at 1.3141 and the possibility of a further extension lower on the cable. Let's now find out what's going on the US dollar index. Ahead of the NFP payrolls, US dollar index is increasing, is moving higher and higher. The recent high was made at 102.81. The key technical resistance on the US dollar index is still located at 103.51. So we are going to mark this level as the technical resistance. If you can see this channel here on this time frame, this is of course the 4-hour time frame, so it's clear for the bulls that they are moving inside of this channel and keep trading higher and higher. So let me just adjust the channel a little bit. Let me just do it this way so we can extend it. And just recently we got this breakout out of the channel towards the local swing high, but then the market returned towards the 50 periods moving average. Right now it's the level of 102.39. so the outlook is bullish. Momentum is strong. Momentum keeps moving up and down to the level of 70, and then moving down to the 56, and then to the 70, and then to 56. This is clear indication that the bulls are in charge of this market, and they are trying to make another wave to the upside and to challenge the technical resistance at 103.50. so please keep an eye on this market, because the NFP payrolls data might trigger a bigger volatility on the US dollar index, especially if there is a surprise in the non-farm payrolls. And the last but not least, let's take a look at the Bitcoin market, because this market is of course trading very close to the last swing low. The last swing low was 28,760. We got some kind of a bounce, so from the level of roughly 30,000. Okay, that was the high, was perfectly at the level of 30,010 cents. We can of course apply the short-term trend line from the swing high and this year's high as well, a yearly high 31,790. Okay, so we are still trading below the trend line resistance. We are trading below the 100 periods moving average, and then just recently we've been oscillating around the 50 periods moving average, but this pressure on the breakout to the downside is still solid, is still increasing. So we might see another wave to the downside on the Bitcoin soon. So this is the situation on the Bitcoin right now. When we zoom out, we can see clearly that the eventual next technical support is 28,446. So we should be prepared that the market might be testing this level soon, but this is very weak technical support, and this one has not been tested yet because there was just a breakout done and no test. Okay, so maybe this movement to the downside is to test this breakout, to test this technical support. Right now, let me just change it to green, and then of course resume the up move. This is clearly the impulsive up move here that we are dealing with. That part of the chart looks very much corrective. So please, sooner or later, be very aware of the situation here on the Bitcoin, because only a sustained breakout below the impulse low, this movement to the upside low 24,753, would confirm the yearly, let's say yearly high at the level of 31,000 and 51,790. Okay, otherwise we still are trading above these levels. The outlook is bullish. The momentum is oscillating up and down because it is a corrective cycle, but behind, in the background, we still have this impulsive cycle as a first attempt of the bulls to break the trend, the downtrend on the Bitcoin, and then keep on rallying. Please remember that the recent impulsive wave, let me just take a look here, was quite substantial because it was roughly around 28%. So this up move was 28%. So that's some substantial movement to the upside, and it might be continued when this corrective cycle is done. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.